The S&P gapped down on Friday. Zooming in on a smaller time frame, you can see where we closed on Thursday and then the gap down. This is extremely important because that is the low. So in other words, the opening bar was the low of the entire index. You can also see on the S&P, all we did was just get to the top of the previous closing bar. You're going to cover what to expect next week, what number one indicator you need to be watching, and 10 stocks I'm looking to either add to or to short. The McClellan oscillator measures the magnitude of advanced decline moves. It does this through a calculation of a 19 EMA and a 39 EMA. Subtracts the 39 from the 19. Without getting fully into it, what we're trying to do is just understand the basics for the purpose of this video. So when you are at a zero line and you go to positive, you are saying that you are bringing money into the market. In other words, you're seeing inflows. Okay. Easiest way to look at it. So then when you're at that zero line, you're still bringing inflows. When you break that zero line, you are seeing outflows in the market. Now, if you go and take a look at the market on Monday, how we acted Tuesday, and then you go look at Wednesday, you're going to see something. Now, if we drill into those days, you can see exactly how we acted and now how we're acting after we have a little turn in that oscillator. It notes the negative 100 level, and this would show you how much money is actually coming out of the market or how many declines are leading advances. In other words, these EMAs shift. So what you're seeing here is when you hold this 100, you can get below here. You can get below into that little area down here. It does happen, but it's pretty rare that you're not going to get some kind of support when you're down at this level. And you can see that pretty clearly here. If you take a look at the July 14th level, you can see that negative 100. And if we take a look at this on the October 10th level. On July 13th, you're right around here. And what winds up happening is the market tends to go a little higher as the oscillator comes in, which is really just measuring the magnitude of the amount of advances leading declines is the easiest way for people to understand it. So if you take a look at that particular period in time, and then we go and take a look at what happened around October, you can see that you had another move off of that level. Now, you can obviously get lower than that, as we saw in that December move right around here, but that is an extreme reading. And what you don't want to do is you just don't want to wait for the extremes and then just act on the extremes. For example, if you are up here on the 12th of January and then you decided to sell stocks because this was dropping through the 19th, you would have missed a very large part of the move. That is highlighted right in here, and you can see that level. Make sure you subscribe to this channel, click all notifications. What we go over here is extremely timely, especially if you want updates and alerts on what's happening in the stock market. So you can see right here how you lifted even though that McClellan indicator came in. The point I'm stressing here is before we all start saying that the market is clearly going to roll over again, understand you just went from, quote, overbought to oversold within 3 days. This is why trading on Thursday and Friday was a little frustrating for people because they're waiting for the down move to continue and then it stops and we start going sideways and they don't understand why. And what will happen to people, especially option traders, is they'll just start bleeding out on both sides of the trade and not understanding exactly what's going on. What's going on is that you are at an inflection point and all they're doing is just taking money out of the market. On Friday, we were very quiet in the Alpha Chasers community. I did very little. And it was based upon what I was seeing where you were not really breaking down and you were not really having any kind of follow through as you see here. And that oscillator is one of several indicators that I use, but there are other things that are brewing. Let's get into some of the names that I'm looking at next week and what we should be focused on. So this is the energy sector. And you can see we had this huge move up, even as Putin has come out and stated that he is going to cut supply that is being delivered. A little flag here, and then we're popping up. We're seeing names like BP absolutely explode after earnings. One name I'm watching very closely is UNG. When we look at UNG all the way back here in December, you can see these gaps, then gap up, gap up, gap up. And then out of nowhere, we have that gap down, refuses to fill in that gap. And that gives us an island reversal right up here in December. And then it's just gap down, gap down, gap down the entire time. Now we saw a shift start early February. You can see right here on this hourly chart on UNG, gap down, gap down. Then all of a sudden we had this little gap up. Well, that's rare. We really haven't been getting gap ups. does not hold. You get that little bearish engulfing right down here, and then we just start riding down on this line. This line could be a little tighter, obviously, but what we're looking for is we're really just trying to get this part of the trend. We're just trying to understand this from where we have that gap down and the gap up. We just start going sideways for a little bit, take out a possible higher high, and then we pull back. Well, every single pullback since December that you've been unable to make a high, the next day you took out a low. You didn't do that on February 8th. So now you have this little angle, let's call it a U more than a V, and you're starting to turn. And then we just start going through the days and start going, okay, well, from this February 8th level, when we should have broken down and taken out lows, we retested on the 9th, came back down, held in here perfectly, right in this gap. If you take a look at this gap on UNG right here, look how you held in there. And then what did you do? You flipped over, retested that level, came back down, held, pushed over like you weren't going to go, reversal bar, piercing pattern, and boom. And guess what you're doing? You're lifting. Do not rule this out. This is something that I created for, these are Demark sequential full rules. And obviously did not create the rules, but what I did was create this script in TradingView so that it will mark off specific levels that are here. And the importance of this is just to understand where we are. So this is UNG on a weekly chart. So if you just take a look here, you can see very clearly that you have what's called a buy combo countdown. So the countdown has started. You can see the green arrow, which means that you're setting up. You can see the 13 down here. If you understand, that is a sign of exhaustion, and you're right into a weekly 9. Now, if we drill into this on a daily, you're getting a little green buy signal right here. Doesn't mean that they're always going to work. Sometimes they work, sometimes they don't. But what Demark does better than anyone else, in my opinion, is find spots of exhaustion. In other words, trend reversal when the buying or the selling might be too much. And you can see these marks, sell, sell, buy, buy. And they did okay, didn't they? Right? They kind of mark your little tops and your bottoms. And I think that's pretty significant. So to be clear, this is something that we've already started accumulating. We're doing okay with it. We're not doing awful with it. And this is something that takes some time to turn around. It's like riding a ship. It's just not going to automatically go up. But I would not be sleeping on natural gas as everybody's basically throwing it out the window. I would not be sleeping on this at all. To join the Alpha Chasers community, simply click the link up here on the right and you will be added to the wait list. Invitation should be going out next week, and then the room will shut down for an undisclosed period of time. We limit enrollment so that we can stay focused. Now, Nvidia, a lot of people are going to look at this and say, oh, I missed it. Did you? Did we miss this? I'm not so sure that we did. So what we have on Friday is we don't have any real follow through. So in other words, here's our little pattern where we broke down on Nvidia right at this level, 1, 2, 3, then we gap up. Then we form a little flag and we go 1, 2, 3, and then we gap. So I say this a lot, and it's true. Stocks have personalities, and the personalities are really just predicated upon the people that are trading them. You can see these little moves, and then boom, right? And that's how it tends to move. What I would be paying very close attention to is the fact that I could not break 209.87. In other words, the low end of this flag and that little breakout area, you could not break. What I am huge on is pattern recognition. What has worked once will usually work once again in the future. See this DTL or downward trend line on the hourly on Nvidia? See how when you broke it and then we just constantly pushed, flag breaks out of the flag. Very little to do in here, but what do you get? Well, you start getting another DTL right in here, right? So you can see that, and you can see how you flip that. And here you actually even have a mini one right in here that flips a little higher, doesn't it? Comes back, retests. So then as you watch this transpire, you can see another one. Now this one gaps up, which leaves everybody out in the wild. Now you have this gap up, gap down, and everybody's saying, oh, that is it for the stock. And all I'm simply suggesting is if you start looking at the patterns and what has worked in the past, you just got a trigger on Friday. So I'm not so sure that it is over. And it makes it very easy because if you start breaking these levels and you start closing below these levels, then you know that you're wrong. Now, anybody that has looked at the weekly knows that this line up here, you could see left shoulder, head, right shoulder if you want to get super technical. At 230 level, that is going to be an issue. But that gets me 17 points. before I get up here and test it again. So yes, I see this wick, but I know that this wick was based upon also the McClellan indicator that came out and the oversold, overbought. I know it's not company specific. I know that the low of this bar is 207.86. So if I'm wrong, I know that I'm where I'm going to be wrong at. It's very clear. In the meantime, if you take the anchored VWAP from the peak, you can see exactly that you are above this for the first time 3 weeks in a row. And you can actually see that the anchored VWAP is starting to curl up. If you look at the numbers on the left on the anchored VWAP, as I come across here, you can see how they drop and then they just start ticking up. They're ticking up for the first time since November 2021. Since we started up here, they have not started to curl up. So lines are important, clearing those lines are important, but what also is important is the significance of the slope. If the anchored VWAP starts sloping up, the probability of this going higher is significant. So DFEN, this is one I'm watching, and I'm watching it pretty closely. We're riding right along this top level and we keep bonking our heads in here. And what I want to do with that is I just want to focus on, are we going to break? Are we not going to break? Well, if we come back to here, we realize that you're basically at a 10-month high, and I don't want to rule that out. And if we look at this bar and we just see how we're acting right in here, we're bonking over and over again. We're unable to break. Now you have a bullish engulfing just sitting up there. I would not rule this out. If this makes a little flip over there, if we find another quote balloon, which seems to be the going joke these days, then we could push a little bit higher. Names such as Lockheed Martin are doing exceptionally well that are in there, and I would continue to watch these kinds of names and see how they act. Now, those kinds of names can move, and if something starts heating up, well, then you can see these break these little resistance levels and push higher. I like doing the DFEN because I don't know who's going to be the winner. But you do have this pattern that's just sitting here now. Breaking that DTL is one thing, confirming it's another, and so you need the higher high in order to confirm it. But I wouldn't sleep on these names. There's a lot of really good articles explaining the depletion of the US military for the war in Ukraine and how we're going to have to replenish that supply. Microsoft was fascinating on Friday. You have this huge red bar down. You have that AI conference, which just absolutely rallied and exploded the stock. So you had a lot of the momentum guys in there. And then what do? You have this 260 level coming straight across here, and you're flipping, and we don't even break. We don't even break on the day. And so you form this little bar and you wind up trading higher. Well, not a lot of tech really went higher on Friday, did it? So I would pay really close attention to this, because as we got closer and closer to this line, we saw buyers. When we zoom in on this hourly and we can see how we're holding right on that level, we can see another little DTL pattern, and I would not rule this out. This whole move is on Friday. We had a decision to make and we made it. Look at what happened after hours towards the close of the day. Look at the buying that came in at the end of the day. So roughly around 8 o'clock on Friday, you just had massive buying start pushing into this name. And I think that's significant. Now, I want to be Captain Obvious about here. This is the peak, meaning the all-time high of the stock. And what did we do here on the weekly chart? On Microsoft, this is obviously the watermark's not in right now. And what you're seeing is we are rejecting that price. Now, I'm not overly surprised by that, because here we are from that peak, meaning that the people that held for 13 months on average are down. And when they're getting a chance to get out, they're getting out. But that is not something that I would just rule out. And the reason for it is a couple things. Number one, yes, I fully see this level right in here, and I see that rejection at 267. But down at this level, and you start looking at where you are at the low on this weekly, and I'm not suggesting you hold it for that whole ride, but to get back up here and test is 15 points. Do I want to wait 15 points? One of the things that happens when you come out of bear markets, and yes, I said coming out of bear markets, is that people just sit there and they wait for more confirmation, and they never pull the trigger. That is a huge mistake, because by the time that you confirm, people are getting out. In other words, people that weren't buying in January off the open of a very clear signal, then all of a sudden, look at what happened. Now you're up here and you're wondering, oh, I should be paying 280, where up 2 months ago or a month and a half ago, you could have paid 224. Of course, you're going to have pullbacks. Now, Tesla, I think it's worth going over just because of what's transpired here, and I would not rule this out. So what we're seeing with Tesla is you're seeing a clear rejection up here, right? And you can see that from that 200 82 level, and I would use that level. That would be my demarcation line. We actually bought this in the newsletter. If you don't get the newsletter, there's a link in description to get it. But these dojis, when they make decisions, we need to pay attention to them. So it is quite possible that the market goes up and Tesla remains weak to going sideways. I would just be really careful here with a bar like this up here and seeing that doji, and probably not be too crazy about going long until we start working this off. And you can work these off. I mean, you worked one off right here, right? And you do work them off. The problem for me is that the doji is pretty significant on what we're saying. Now, if we take off the pre and the post, okay, the doji changes a little bit, and you almost have that, quote, abandoned baby pattern that's sitting right up there. Okay, so more of an evening start, but it is what it is. Now, looking at that, just make sure at the end of the day, just make sure, because I had pre and post in there, that it actually breaks lower lows before you even think of shorting it. I'm not so sure that that's what I would be doing here. I think you need to be really careful. You know, a lot of people are waiting for CPI. And this is a point I really want to hammer home. TGTX is another one that we trade in the newsletter, bought at 1550. There's our stop right now. And we trimmed once when we were up around 10 or 11%. See this little DTL that's sitting there forming? Now, if you take a look at this, this trade's not over. And I've hammered this one home in a couple other videos. So, and please comment if you like me going over some of the same names over and over again. It tells me where my focus should be. But if you take a look at something like this TGTX, and you can see how you're forming what I would refer to as a flag. Maybe it's a little wonky because now you have this peak of it, but a flag nonetheless. You make that higher high, you're probably going to continue to push here, aren't you? You have very little that's going to stop you getting to that 2069. And if we look over here on the left side of the chart that I'm filling in with this green circle, you have this gap in here. Now that gap means that I don't have any buyers or sellers, which means what? I don't have any supply. If I don't have any supply, it's a lot easier to get through something without supply, which means that if I can get through this 2069, which I'm already doing fairly successfully, working through the gap, then getting to the top of that 2336 really shouldn't be that big of a problem. Now you can see down here that you have this double bottom, tested up, broke through, ran the line, support became resistance at 8. But this anchored VWAP, and I find these fascinating. When you have an anchored VWAP that you've never closed above before and you start closing above it, you need to pay attention to that. So this is pretty significant. You can see these levels on the weekly, how you could even get a little bit higher than where I was. Now, there is nothing technical about this chart that looks good except one thing. Red bar breaks down. Where's my follow through? I just stopped dead. Zero follow through. It doesn't mean that you don't get it the next day. And I'm not telling you that you need to be looking at getting it right away. But if you can get back over that 179 level and push and flip there, you're going to have a lot of shorts trapped. I have a $40 billion buyer out there. They're buying their own stock back. So I would watch this very closely. I'm surprised that you just stopped here candidly and that it just did not do some kind of gap fill more than what we saw the other day. All we did was take out that low and then drop down. Now, I'd be remiss if not showing you this. So up here is the anchored VWAP. It's one of the reasons I haven't put it in the newsletter because it was up here. But that's 194, 197. So yes, did we reject the anchored VWAP? Yeah, we did. But we've been rejecting it because people are like, you know what? I've been in this forever and I just want my money back. That's all this is really telling you, right? If you think like them, which is exactly who we are, right? We're all traders. And if you were buried in this and you were buried in it for a year and a half and you could break even, some people are going to take that, right? So when you understand what these things actually are, you can make money from them. But you're still forming a flag. And under here, I would really pay attention. Now, I'm going to give you a dark horse. ARK K. You're going to want to keep your eye on this. And I'm trying not to laugh because so many people are just so negative about this lady. And meanwhile, she's called Tesla. She called the Bitcoin move. And everyone's concerned because, you know, obviously, these types of companies and her money management skills leave something to the imagination. I don't fully understand it, nor do I expect to. All I will say is this. When you come out of a bear market or you come out of a correction, the most heavily shorted names move the most. Now, again, you've gone from this 30 and you're back up to the 40, but to even get to that anchored VWAP, even to get up to here, that all-time level is a 62. Now, I'm not suggesting that you're just going to miraculously do that because you're there. But what I am suggesting to you is it's not unrealistic to have some kind of pullback. Again, I pay very close attention to the individual bars. So I want to look at these individual bars, and please comment on these colors. I really like these colors, and also comment on the fact I'm going over some other names that you might have to wait a little bit on. I see this right here. I see the DTL, right? I see this downward trend line. It's not like I don't see it. Okay, I see this gap and I see this gap here, and I understand that this could be a possible island reversal. We didn't break the breakout bar. We did not close below the breakout bar. Gives you a very interesting spot to watch and see how this plays out, doesn't it? Watch that 38, 37. If you break that, okay, well then you know maybe I should stay out of the way. I'm not saying rush into this, but what's going to happen if you flip this 40 and a quarter? That means that I can get back up to this DTL and retest it. And meanwhile, we have everybody sitting around waiting for Tuesday's CPI number. The last 4 CPIs are marked by green arrows, and you can also see in these circles and how we acted. I think it's pretty significant to understand that you sold down ahead of these CPIs and then exploded up when they were released. And it happened over and over again. This time was the only time in January where it really did not happen over the past 3. So you can sit here and you could wait for it, and basically what I refer to it is you're basically CPIing all over yourself. You're just better off looking at the charts, making decisions, putting stops in place, and let whatever happens, happens. Stop predicting and start analyzing.